Okay. Today is Friday, June 26th. Where's that? There it is. It's 2:15. It's during market hours, and I wanted to get this out there because I had put, where is this? Here. I had made a Robinhood account. I don't typically trade on Robinhood. I have an E-Trade account from years and years ago from the E-Trade baby commercials. I made a Robinhood account and I put $200 in it. This is going to be what I talk about where I say, if you put $200 every Friday and then you dollar cost average into stocks, that you can grow this exponentially and eventually make this pay for itself, be self-sufficient, where I'm going to put $200 every Friday, and then eventually this will make $200 every Friday. Instead of me giving it $200, it'll make its own $200. It will be self-sufficient and self-sustaining. And then the $200 that it makes itself will go into buying more shares or something else that's low. And so that's basically what I'm going to do here. And the reason that I'm doing it is because sometimes when I talk to people, they think that what I've done is already out of range for what they could accomplish. And that also that the dollar cost averaging and adding the $200 every Friday consistently can turn into something. And if I do this and I do it from 0 or from 200, because today's Friday, and then I walk you through every single moment of how to sell calls or sell puts or get into a stock, that I could do it on the platform that everybody else is using and be able to show it exactly as how I'm doing it. So today is the first Friday. It's June 26th. Market's open for another 45 minutes, and I have my first $200. So what I want to do is first I want to know what's low, and I had a whole shopping list last Friday. But that's my thing, and that's going to happen somewhere else, because here there's only $200. So I can't really be buying all of these things that I want to buy on the other account that I'm not even going to reference that. But with all of these things that are low, I want to be able to spend my $200 on somewhere that is accessible to me. And right now, that's going to be MSTR. MSTR has been extremely beat up since last November, similar to Netflix, similar to Meta, similar to Microsoft. Extremely beat up. And, if we were to look at the Microsoft chart going back to 10/20/25, it's done nothing but go down. And, we've been buying this. MSTR is effectively the same thing. There are 5 or 6 companies right now that are good, solid businesses, and they are extremely beat up. MSTR is a kind of an outlier because it is directly associated to Bitcoin, which is BTC, and this does not necessarily mean that it is a good company, because it really comes down to your personal opinion about Bitcoin and if Bitcoin itself is a viable commodity. Now, I do believe that Bitcoin is a viable commodity. I believe that fictitious internet gold does have value. There's you're not really going to hide from that idea that fictitious internet gold does have value. That, in my personal belief, the strongest currency and most powerful currency in the world is the US dollar. but that the US dollar is completely backed by faith. The United States has not been backed by the gold standard in almost 100 years now. All of the gold that exists or may not exist, I'm not really a conspiracy theorist, but exists or may not exist within Fort Knox, does not back the US dollar anymore. They got off of the gold standard nearly 100 years ago. And the US dollar is entirely backed by faith. It is backed by the idea that America will still exist tomorrow, and so America's currency will still be able to be traded for milk and bread tomorrow. That is the only standard that upholds the power of the American dollar, and it's the most powerful currency in the world. Bitcoin is essentially no different. It's backed by the faith that I believe that the internet exists and that the internet is important, and that the internet will still continue to exist tomorrow, and therefore Bitcoin will still exist tomorrow. And so long as the internet exists, Bitcoin will still be there, and its value will be dictated by people who buy it. If governments around the world are acquiring Bitcoin, if banks around the world are acquiring Bitcoin, then the most important financial floors of the world are holding Bitcoin for its value, then just purely on the faith of the internet existing tomorrow and those people having Bitcoin, I believe Bitcoin will exist tomorrow. And that's really the only leap of faith that is required to consider Bitcoin as valuable. Is, will governments and banks still be around tomorrow? Will they still have Bitcoin tomorrow? And will the internet still exist tomorrow? And that's it. My leap of faith is done. I believe that Bitcoin will still have value into the future, and that eventually banks will use it to draw loans against, or for securities trading over large areas through the internet, being able to send money to another country or back and forth. I'm pretty sure that this is the currency of Venezuela right now, that they had trouble with their inflation. They had trouble with waking up tomorrow and wondering if bread was going to cost them 10 million Venezuelan dollars or 100 million Venezuelan dollars. So to stabilize their own finance within their country, they tied their currency to Bitcoin and said, we are now founded and funded by Bitcoin. Everything that you buy in Venezuela is now in the currency of Bitcoin. So that is where I believe the world is progressing, and therefore Bitcoin will have value and Bitcoin will continue to grow. And so just based on that, Bitcoin's going to go up. Personal opinion, but if somebody could get behind that idea, then they could buy Bitcoin. It's not a company. It doesn't have earnings. It doesn't have a financial report or accountants releasing the earnings, in a couple of months. It's just solely a commodity like gold or copper or maybe not diamonds, because I could argue differently on that. But either way, Bitcoin is, in my opinion, the gold of the internet. And that's it. So then MSTR buys Bitcoin. That's effectively what they do. And so because Bitcoin is down, MSTR is down. I want to buy this. This is my chosen stock out of Meta, Microsoft, Amazon, Apple. This is my chosen stock. And the reason that it's my chosen stock is because MSTU is under $2. MSTU is under $2, and I have $200. So it is chosen. It's the chosen one. This is what I am going to build this account off of. It is the foundation that this account will be founded on. So if I then look at MSTR, and I look at the pricing that I would like to pay for it, there is the high probability that Bitcoin returns to the median on the standard deviation at $106,000. On MSTR, that is going to translate to about $300 MSTR. And on MSTU, I actually have no idea. If I try to find, I guess, a much smaller chart, the 90, what is that? 90-day 2-hour. So on MSTR, oh, let me try to find it. What did I say? 300? 300 is going to be roughly around October 30th. No, it's higher than that. October 16th, right in here, October 16th type area. So if I go on here, October 16th is $39 MSTU. So that is going to be my selling target. That's going to be where that's like my upwards trajectory of where I believe MSTU will go, is roughly $40 on MSTU. That is translated to $300 MSTR or $100,000 on Bitcoin. So then knowing that, I can start to decide what is a good price I want to buy and what is the target price that I'm generally heading for. If I look at MSTR and I try to figure out where we are going for where I want to start buying, there is this when signal right here telling us when, quote unquote, when MSTR should start to try and climb back up. And if I was to draw this down and draw this across, rough bullshitty math is going to be about July 6th. On Bitcoin, if I do the same thing, this should translate to roughly, bullshitty math about the same time. So if I draw that down and I draw this over, then we are at like January 1st. Again, rough bullshitty lines and bullshitty math, speculating on when this is going to come together. But this is going to be about January 1st, and it's roughly $70,000. And on MSTR, this is going to be... Let me get back to that thing here. Roughly 142, which is also this June 2nd line. So the top of the red candle on June 2nd is going to be my I'm happy to pay this price under here type of line. Because at minimum, let me thicken that up. Just give it one of them, and we'll give it one of these, and we'll just make it some kind of off color. Okay, so roughly here is something I'd be happy to pay for MSTR, because that's where I would expect it at minimum to return to. And then, somewhere under here, if we called it, right there at $110, is just going to be a really great buy, because from 110 up to 140 is about a 40% return. MSTU is a 2x leverage, so a 40% return is going to be an 80% return. So let me just change this and make it like that and thicken it up a little bit, right? So anything under 110 is going to be a very good buy for me, and then somewhere north of 140 is where I could potentially start selling calls. On MSTU, we will go to a much shorter time frame, and we'll try to translate that over, where that is going to be the June 2nd drop, and then all of this like little consolidation under here, which is also 1.5 standard deviations away. If I could buy everything 1.5 standard deviations away, I'll be incredibly happy. So I am going to put in that consolidation there and the June 2nd mark. And where is June 2nd? Right there. So we're just going to put this. Yeah. That's going to be basically $5 right there. And then we'll thicken it up, right? And then all of this consolidation under here is going to be $3. So let me change those colors again. Oops. Okay, so if I could buy MSTU for everything that's under $3, and then we take it up to $5, it's going to be an 80% return, and then I can start selling calls. And when I start selling calls is when I start getting an income from this every Friday. Now, we can talk about that when that time comes, but for now, what I need to do is start acquiring shares. I want to acquire shares for anything under $3. This is 1.5 standard deviations away, which is about $2.50. So I could roughly keep that area in mind to say that anything $3 to $2.50, anything under there is 1.5 standard deviations away, and that a complete return to the local mean at 90 days, 2 hours is going to be roughly $5 at an 80% return, and then I can sell calls. So then what I want to do is, now that I've established that I want to be buying under $3 and the plan is to sell for somewhere $5 or above, I want to buy my shares. So if I go to MSTU and I buy 100 shares, 100 shares would cost me $153. If I buy 100 shares right now, then I am just accepting that price as the price that is available. But I don't want to do that. I don't want to buy shares outright. I want them to pay me to acquire these shares. And so what I'm going to do is I'm going to go to Trade MSTU Options, and then anything under $3 is what I am willing to buy. Now, I don't have $3, I don't have $2.50, I have $2 because I have $220 in this account. I have $200 available to me in this account. This is the ability to buy or sell 100 shares. And $3 times 100 is $300. So I am looking at the $2 calls or the $2 puts. And what I'm going to do is I'm going to sell a put for $2. Right now it's going for 45 cents. Where is the date? I need the date. The date right here. So this date is expiring today, June 26th. I want next Friday's date, which is July 2nd. And then the $2 one is going for 46 cents instead of 45 cents. That is called the Theta. It's a 1 cent premium on those extra 6 days that exist. Because right now I could buy it for $1.53 or $1.52. So if I said to somebody, you can sell me your shares, I will happily buy them, and I'll buy them at $2, then this price is that nobody in their right mind would buy MSTU for $2 when the price right now is $1.53. Right now, that would be 48 cent difference. That somebody should be paying me 48 cents at minimum to even entertain the idea of buying this for $2. And so that's what this price represents. There is a bid and an ask, and they are asking 55 cents and offering 46 cents. $2 minus 46 cents is a break-even price of $1.49. And so right now, if it is $1.52, then what I'm theoretically buying MSTU for is $1.49, and that's a 3-cent difference. That is the premium that I am getting paid to entertain the idea of buying 100 shares from them. So if I sell a put, then what that means is next Friday, July 2nd, I will have to buy 100 shares of MSTU for $2. And for the luxury of entertaining that idea, somebody will pay me 46 cents for that. So I'm going to sell this, and I'm going to sell it, that should be 49. So if I go to sell one, and right now it's 49 cents if it was break even at $1.50, $1.51. So if I say I'll sell this for 50 cents, then now we have a $200 collateral where I haven't actually purchased the shares. I haven't purchased anything at all. I have sold a put, and the put is just a handshake agreement that I will buy 100 shares next Friday for $2. Regardless of what this price is, next Friday, I will buy 100 shares for $2. And then, so somebody is paying me 50 cents for that opportunity cost, for the opportunity that I might possibly buy their 100 shares. They're going to pay me 50 cents. And so I'm going to submit that. So now, if, how do I get back? Did it go through? I don't know if it went through. Yes, it went through. Okay, so now this has gone through, and and I have it right here. So I have a one put that has been sold for 50 cents. And now I am on the hook for buying 100 shares of MSTU at $2, but they paid me 50 cents for it, which means that my break even right now is $1.50. The benefit of doing it this way is that if MSTU continues to go down, where's this? Or, I mean, we just look at a real chart. Which is kind of the reason I don't use, that's why I don't actually use Robinhood, because the charting is very bad. So, if we were to look at MSTR or look at MSTU, this has been just like cratering. It's been dropping since October. That's September. So since last September, it's just done nothing but, realistically, it's done nothing but go down. So there's nothing really to say that this won't continue to go down. So I don't want to pay just outright $1.50 for these shares. I want the ability to kick the can down the road if this does drop. So if I next Friday come look at this and this is at $1.25, then this will be at 75 cents, and I will, in theory, have lost $25. But I don't actually have to do that because I can kick the can down the road. I can roll this. I'd have to figure out where it is on Robinhood. So if I click here, and then, so I have roll position. So then I can take this, and instead of expiring on July 2nd, here, it'll move me out to July 10th. And then the $2 one right now is going for 55 cents. I just sold the put that I had for 50 cents. The one week later has 5 additional cents attached to it. So if I was to roll this out, I would gain $5. That no matter where MSTU goes, if it goes to $1.25 and this increases to 75 cents, then on the July 2nd, if this increases to 75 cents, then on the July 10th, it'll say 77 cents. And then I can just roll it out and I can kick the can and kick the can and kick the can down the road. But what I am now break even for at $1.50 next week, if this is at $1.25 and I roll it, now my break even is $1.25. So now I've lowered my cost basis of what I would actually be paying when I decide to buy those 100 shares. What I would actually be paying is $1.25, not $1.50. Or if I do execute this next Friday, say it goes up to $1.99 and this is only worth 1 penny, then I can allow it to execute and force me to buy 100 shares because I am buying them at $2 minus 50 cents. That I'm technically paying a cost basis of $1.50, and the current price, let's pretend next Friday is $1.99, I've already made 49 cents on it. And so I could then just sell it in profit then. But if I don't actually want to acquire those shares yet, if the price that I sold the put for is lower than something I'm willing to accept, I can just roll it. I can roll it out to the next week and I can kick the can down the road, and then that next Friday roll it again and roll it again. And that's the process that I'm going to go through with this account. Is that I'm either going to allow it to execute or I'm going to kick the can down the road until it's a price that I'm happy with. But I am not on the hook for these 10%, 20% drops that are happening, which is kind of, if we look at Microsoft or Netflix, where we've been seeing this drop since last October, when we started buying these. Where is... I guess it must have been here. So in last year's ideas, I wanted to buy Netflix, Meta, and then in January I was buying Microsoft. When I go to buy these kinds of things, I don't actually get caught up in this big drop. This big drop doesn't really matter to me, and so I'm not very conscious or aware of that it even happened, because all I do is just roll puts out. I just roll them out until I'm happy to start acquiring shares. And when it gets to a point where it starts to climb back up, but I have sold puts here at $95. I don't remember what the original drop was or what price I had originally said that I would be happy to buy it under. But if I had initially started selling puts there, and let's say that it was $110, if I had initially sold puts here at $110 and I sold those for $5 per put, then I'm covered down to a drop of 95, to a break even of 95. But that next Friday, if it had dropped down to 95 and I didn't want it to execute yet, I just roll it out. And I roll it out and now it's worth $10 or $7 or $9, and I continually am hedged to the downside. So here, I'm hedged to the downside at $1.50. And then next week, if the price is $1.25, I can roll it out and it'll roll this from 50 cents up to 75 cents, because that's $2 minus $1.25. And now I'm hedged to the downside all the way to $1.25. So I can continue to be hedged to the downside and never actually take a loss on anything that I buy. And when this starts climbing back up, then I can allow it to execute, acquire those 100 shares, and then take the ride upwards and start selling calls in the opposite direction. So that's basically what I'm going to do. And, I kind of wanted to just go through this. And so you saw kind of how it works. And if it doesn't make sense, then I'm sure I'll hear about it at some point this week and I can go through it again. But this will go on for several weeks. That next Friday I'll put in another 200, and the Friday after that I'll put in another 200, and the Friday after that another 200, and I will sell another put and another put and another put and another put until this starts going up. And if at that time I end up with 5 puts sold or 10 puts sold, and that's 10 weeks down the road, or 20 puts sold and we're 20 weeks down the road, it doesn't really matter to me, because I'll just keep rolling this one that expires next Friday. I'll roll it out and sell another one, and roll it out and sell another one, and just slowly acquire more sold puts at whatever pricing that this is giving me. And then when I feel like it's time to allow it to execute, I will then be forced to buy 100 shares, and it'll be at the price of my choosing. So I am not forced to buy any of these, because I can roll it and I can allow it to execute at a price of my choosing and acquire those 100 shares. Or if this goes above $2, if this just wakes up tomorrow and skyrockets, where is MSTR? If this wakes up in 10 weeks and just completely skyrockets past my $2 mark, where is MSTU? The $2 mark is here, which isn't extraordinarily high from where it currently is. That if we wake up tomorrow and this bounces out of this the way that like this one did, and this was on like a Friday, this bounces out, covers that $2. Then what happens is this expires worthless. The 50 cents that I had sold it for is purely profit. It's just purely 50 cents that I have gained for offering the opportunity that somebody might sell me these shares at $2. So if MSTU goes to $2.01, then that's 100% profit. This expires worthless. It's not worth anything, and it won't execute, and I won't buy 100 shares. It'll just pay me 50 cents. And then I'm also happy with that outcome, because right now I have in collateral $200. There is a profit here of 50 cents. That is 25% of 200. And so if I could make 25% gains every single Friday, I would also then just do that. If I could just guarantee every Friday I make 25%, then I would just do that every single Friday instead. So if MSTU does go to 201 or above, this option expires worthless, and I purely profit this 50 cents just for entertaining the idea that somebody is given the opportunity to possibly sell me 100 shares. And so that is why I don't buy shares. I sell a put, because I have all of the leverage, I have all of the control, and I have all of the opportunity with effectively zero risk. There's nothing that can really make me have to lose money until I choose to either acquire the shares and have them, which I can do at a price of my choosing, and I can do that when this goes to $1.99. If this goes to $1.99, this is worth 1 cent, but I'm technically buying it for $1.50 instead of $1.99 because I have sold this for 50 cents. Then now I'm already in the green, and I can then acquire the 100 shares. Or at 201, this expires worthless, and I just purely collect 25% profit. And so that's the first step. That is day one, Friday 1, my first $200 into Robinhood to start this out. And then, the reason that I'm doing it like this is because if I have to explain this, like, theoretically, if I just have to try and sit down and explain it in thought bubbles, just in the air, where I'm saying, yeah, we sell puts and we sell calls and we buy it here and we just do this, then it doesn't really make a lot of sense. So I'm just going to do it, right here, and I'm just going to do it every Friday, and I'm going to do it at the same entry style that I have told everybody else to do it at. $200 every Friday for however many Fridays until MSTU goes up and we start selling calls. So next Friday, I'll put another $200 and I will sell another put, and we will just start from zero. So yeah, that's it. This is day one. I just sold a put on MSTU for $2, and that's it.